Today we got the news of jobs and some market news too. We'll start off with US payrolls rose 50,000 in December. Less than expected. Unemployment rate falls to 4.4%. Good. Starting off the year strong, it seems like. So here we go. Here's your unemployment rate. This is from the Fed. You have your chart here. As you can see, every time we get a curl up in unemployment, you get this gray bar. Gray bar representing recession. We don't have gray bar yet. We have the curling up. So it's like you feel a rainstorm coming your way, but it starts with little tiny drops here and there. That's how it feels right now. Also, all your employees, total non-farm, you have your employee amount dropping. It's starting to smooth out over here on the top right. Every time it smooths out, seems like we get a gray bar again, which signals recession. So we can see things are starting to slow down a little bit out there, even though the news is saying, yes, we're doing good. Charts here, these are historical charts, are saying you're getting a slowdown, like what's happened, how many gray bars are on the screen times. U.S. consumer sentiment perks up in early January. You guys are spending again? Here's your preliminary results for January. I wish I could talk. January 2026. Your index of consumer sentiment went to 54. And December it was 52.9. So we're higher right now than the month of when we spend everything. Something's not adding up right now. Now I just want to jump over here real quick. This is your 10-year yield. This is a pattern that it's currently in. If the 10-year yield breaks up out of this pattern, we get more inflation. If it breaks down, less inflation. Right now, we're still bouncing in this pattern. We had the previous pattern where it broke up out of and then just started sitting on the line. Now we have this better pattern. You always have to adjust your lines when trading. It's just how it is. If you make it over that 200-day moving average, that giant yellow line, you're going to see more inflation. So hopefully we don't do that. As China's consumer inflation scales 3-year high, but deflation battle far from over. Now, if you guys don't know, in the world of macroeconomics, China's the one that hands out deflation to the global economy. The US hands out inflation to the global economy. So, if they're handing out more deflation and the global economy is cooling down, you can see maybe some things going on. I have another chart relating to that, but you may see some military movement going on to try to get more stable economies worldwide. Wall Street rises to more records. So, let's go break down some charts real quick. Here is your S&P 500. You have that pattern that you're still in. Cool, all-time highs. Doing great, aren't we? Well, the show's just about over and you're watching the finale. With this pattern that it's in, it's starting to reach the end. We will find out, I'm going to say next week, which way we break. If we break down, S&P 500 go down. Break up, S&P 500 keeps going up. Here's your Qs, also known as the NASDAQ. You guys got a strong breakout that I was looking for before in the chart. You guys didn't get that strong breakout on Wednesday of last week. We got it on... Ooh, we're still in the same week, aren't we? I forget what day it is. But Wednesday, you guys broke out a little bit. Long wick. I said it's most likely a fake out. It faked out. But now, today, Friday, you have broken up to the upside. Now, all Qs has to do is come down, retest, find support, and keep going up. And finally, for the big markets, you have your Dow Jones Industrial Average. Here's your pattern. You broke big line that goes down forever ago. Cool. You're in a small pattern that's usually bearish. What Dow Jones has to do is stay above this line that goes back forever ago. If it does that, Dow Jones will be fine. If it doesn't, and it breaks down out of this small pattern and breaks down below this giant line, you can expect a pullback in the chart. Now, just real quick, before we get to the last chart, we have your dollar, DXY. You can see today we cleared the 200-day moving average. Good job, dollar. Every time the dollar goes up, usually you have a recession, by the way. Right now, we're just sitting on top of it. It could just be a throwover like it was back in November, but we'll see. And finally, you guys have your oil. I said you're in a pattern, and if it breaks up out of it, you might see an article about military action somewhere, some point in time. We'll see what happens. But your oil broke up out of this pattern. You're going to move your price target over here. Oh, would you look at that? It's going to go hit that giant yellow line and test gravity. Most likely. We will see in time. I don't know how long it's going to take to go up there and hit that. It might not even hit that, but we will see. Now, if you guys enjoy viewing this content like this, please make sure to like, subscribe, maybe share the video to somebody that might enjoy this content too. And with all the chaos out there, I will keep saying it, go start a business. I don't know what business to start, Gordo. Well, you just start something. You go wash some trash cans, you go wash some windows. Oh, but that's oversaturated. Okay, so just be better than the person next to you. The goal is to have consistency. Consistently do it here and there, and you will see results. And make sure you improve on some stuff here and there along the way. Don't stay consistently with the same strategy. You have to adjust yourself. Anyways, that's enough talking for me, and I will see you guys next week, Monday.